What's up, everybody? Welcome back to the Everyday Growth Advisors live stream. It's Friday, so happy Friday to all of you guys. Welcome. Happy trading day. I hope you guys have been having a great week so far. This is another closing week to another chapter, and we will go through some important things today as well. So I hope to keep this live stream as lively as possible. If you're here for the first time, please make sure that you subscribe and smash the like button. Or if you're here and you're a returning member of the stream, smash the like button anyway. You know how we do. So good morning. Welcome. Gonna kind of get through the news today. Gonna get through the pre-market movers, see what's moving. Might even have some time to do some tickers today. And yeah, I have a little bit of a little something to talk about. How the economy is not the stock market, which we have discussed at length in the past. And I just want to kind of go through that a little bit with you guys. So let's have a look at what's going on today here with the news. We always do this at the start of the live stream. And the reason why we do this is not because we want to see the news. We treat the news as entertainment, right? But we want to know how other retail traders are reading the news and what is their outlook, right? People who don't know the markets well and they read the news, what are they seeing in the market and how will they react to the stuff that's on the news, right? And this helps us to kind of set up a precedent on how the market will behave. It's kind of getting the psychology of the day in order. If the news is bearish, we try to go for bullish positions. If the news is bullish, we try to go for bearish positions because we don't want to trade with the herd, right? Even though the trend is your friend, you should be looking at opportunistic moments to get in and out. Okay, that's the key of the game. I know they contradict each other to some degree, like as though when we say you got to follow the trend, right, going upward, but the main fact of the matter is you got to know when to get out as well sometimes. Okay. So today we have what is here. Goldman sees room for S&P to surpass 3,600. Of course they do. They're probably bullish on it, right? And that's bullish news. U.S. futures slip, travel rules hit Europe stocks, markets wrap. That's slightly bearish. TikTok something, Nadella something, Microsoft. I'm honestly over the TikTok news. Like, they need to stop. Like, either buy the damn company or don't. Like, I don't care anymore. It's like, you put your left foot in, you put your left foot out. That song you sing when you're a kid. And then China's president makes a political gamble by telling Chinese to clean their plates. Okay. All right, then. China's peer-to-peer lending purge leaves $111 billion in losses. Hong Kong cuts economic forecast to record lows. Hong Kong, man, had a really tough one. They had a political upheaval, and then after that, they got hit with COVID. Dude, that country's going to take a while. It's going to take a while to recover. It's going to take a hot minute. Okay, Bloomberg, not much else. Kind of hybrid there. Not really bearish, not really bullish. Let's see what the Wall Street Journal is reporting here on the market section. U.S. stock futures edge down. Okay. Did it really edge down though? Yeah, I guess so. Kind of, yeah. Well, I have been talking about how you should be hedging your position. So I hope that some of you took my advice and have been hedging. We were talking about hedging for the past 2 or 3 live streams already. I believe I started talking about hedging last week, and I gave you guys a call out on the hedges, specifically QQQ, and on what was the other one? It was UVXY. Okay, and they were both the ones that I wanted to hedge. So I hope you guys are hedged. Let's see here. Libor pains deepen as deadline for benchmark demise approaches. This is the London interbank exchange rate. We can go into more of this a different time. This is a whole other topic in finance. And then we have Muni default search, but yields don't follow. Okay. Coronavirus local government finances, but the municipal bond market rolls on. So, well, obviously, individual states are now facing pressure of defaulting on their own finances, but this ain't a problem. Why? Because the federal government will still back them out and bail them out. So people are still comfortable with investing in those bonds. That's what this news article is saying. China to expand testing of a digital currency. Okay. See, many a times you read the news, but you don't really understand what's going on. So you got to kind of break it down a little bit, see what's going on, and then you can kind of get, a breakdown. A China Netflix faces SEC probe after short seller report. Ooh, this is a long-term company that I really thought would do extremely well, and now, man, it's a spin-off company of Baidu. I actually had, at some point in time, I had 1,700 shares of this company. That was bought sometime, I want to say, last year. The stock price hasn't recovered since then, but I feel like this would long-term be a good winning company. It's like the Netflix and Disney combined of China. I have to see what this is about, but I have to read further into that article and see if it's a load of bull or is it true. Farmer Herd CEO agrees to settle claims tied to accounting misconduct. Okay. Overall, market's looking kind of, news is looking kind of bearish, right? If you say leaning bearish, I would say, right? Leaning bearish. So it's kind of a 50-50 flip in the middle. So expect today to possibly be another like choppy day. I knew yesterday was going to be a choppy day. I literally said it at the start of the day too. I was like, guys, this is going to be a chop. Like just away from the way market makers were frenzying on the upside and the downside, it made a lot of sense that yesterday would be a chop. And so it ended up being a chop. But let's have a look here at the pre-market movers and see what's going on here. Applied Materials up a little over 3%. We have Madison Square Garden something. Tesla up about 3% here to $1,672. And then Nutanix, what other stocks are there here? Nothing else that I really know much about. Carnival Corp, Ali Financial, Norwegian Cruise Lines. Okay. Pre-market, not that many crazy movers. IQ down 11%. Jeez. Whew. Let's have a look at this one. Oh, I actually do like this. Well, personally, I would be a buyer if it hits like 16 again. If IQ hits $16 again, this level here, I'm gonna be a buyer. Oops, I have it on white, that's why. This level here, $16. I want to be a buyer right here. This is a good stock to own long term, irregardless of whatever the news is saying. I like this particular stock because of the versatility of its portfolio. You need to do a lot more research about it on your end, but I have been following this company for a while, and I think that they long term have good prospects. And China's economy is not going anywhere, so they have good prospects within China, and that's enough. Like I personally don't even need this company to expand out of China in order to be successful, because they have such a big local market, and they focus on short form videos and long form videos. So this is a good long-term hold in my opinion. And then if it's trading at $19, yeah, let's see how this does for the next week. I think it may come down a little bit more. So let's hope the market frenzy continues. If it comes down to 16 to 17 here, I may pick up some long-term leaps on this this specific ticker. Okay, other news. We have core retail sales today, which is gonna. Oh, it already came out. It was positive. And then we had non-farm productivity. We had unit labor costs, retail control. Actually, all the news is already out. It was out at 8:30. So this was the news for today. Looks better than expected. Retail sales just a bit down. Expected was 1.9%, and it's at 1.2. So we're looking at kind of not bad here. I mean, it's not that bad news. We'll see how the market's reacting here. So SPY kind of did a little doodied up, and then came back up again, kind of did this, and then now it's doing this. We want to really look at this on a daily chart. We're having a really tough time getting up and above here. This is the reason why I said being rejected here is a real possibility, okay? But the only good news is that the longer we stay up here, okay, the longer we stay up there, the moving average will continue to go upward like this. So it makes the distance that it has to drop far less, which means to say that the drop might not be that drastic, okay? So ideally, that's what we kind of want, okay? But then knowing the way things go, if there is some kind of a shock to the market, then we'll see even surpassing the 50 moving and then below it even. So definitely a good time to pick up hedges here. Pick up hedges, guys. Hedge your portfolio so that you can sleep at night without having any heartache. Okay, it's worth it to pick up a hedge here. Okay, even on the Nasdaq, I feel, in fact, more than SPY, you should be hedging against the Nasdaq here. Okay, tech is on a crazy roll. All right, and I don't feel comfortable buying tech at this point. Right, I told you there's so much more investment risk to reward in other sectors, and therefore I would rather look at those sectors. Okay, so hedge your portfolios and bet against tech as a part of your portfolio. So I'm talking about QQQ puts, right? You can do those, and then you can also buy SQQQ. This is a inverse ETF. Okay, and it's also leveraged. So SQQQ is another one. And so you would buy puts on QQQ, but you would buy calls on SQQQ because it's a inverse ETF. So this is betting on the stock, the Nasdaq going down. Okay, QQQ puts is also betting on the Nasdaq going down, but you would buy calls on SQQQ because it's an inverse ETF. So it's the opposite. Okay, it behaves opposite. So look at what gives you the better risk to reward ratio and go with that, because this rally is at some point going to end. Okay, at some point. Now, I'm not saying it's going to go and do one of these again. No. What I'm saying is a nominal 3%, like a nominal 3.5 or a 5% correction, it's super normal. Okay, it's super normal. The market needs that in order to continue up. Okay, so I'd say hedge your portfolio. You should do it, and this is the opportunistic moment to do it. Because even if the Nasdaq breaks this high over here, okay, and remember, when you're taking your hedges, take them for a month out, okay, 1 month out, so that you have time, okay, you have time. This is super important. You need to have time on your hedge, okay. Take it as an insurance bet. Even if we break above this, right, Nasdaq may run, but it's the harder it runs, the harder it will fall, okay. So keep that in mind. Let's see what's going on with the chat this morning. Good morning, guys. Make sure you guys smash the like button. Welcome into the stream. Whoa. Good morning, good morning. Boeing gives me anxiety. Ooh. I hope you don't get anxiety, man, because remember, we're taking a long-term position on that company. We're not trading it for the week. If you're doing that, that's a completely different approach. You know what I'm saying? Okay. Well, also another thing is couple of housekeeping things just to remind you guys a little bit here. Let's see here. Okay. First, if you did not attend yesterday's webinar for free, the free webinar that happened yesterday, I highly recommend you to watch this video. Okay, this one right here. The growth webinar with how do you trade pattern breakouts. I went through some really important key basic things about trading breakouts, okay? And I can't believe that we're almost about to hit 2K subs, by the way, guys. Thank you so much for your support. Like, it means a lot to me. I want to say, like, seriously, thank you to each and every one of you for being here, you know, putting in the time and coming to my stream. So watch this one, first of all. That's the first announcement I need to make. The second announcement is, if you were looking for details on the mentorship course, which is going to start on this Saturday, remember, the sign-ups start on Saturday at 12 p.m. Okay? Saturday, 12 p.m., like it says over here. Okay? Go to optionswing.com, and I'll show you right now what's going to happen. On Saturday, you got to go to optionswing.com, and you got to click on join now, and then it's going to bring you to the product page, and the product page on the bottom is going to have the beginner course and the intermediate course. We're not enrolling for the intermediate course anymore. We're only enrolling for the beginner course. So what's going to happen is these two buttons are going to switch places. Okay. If you're an OptionSwing member, you'll go to the OptionSwing group chat and you'll find the coupon code that will give you $80 off your course. Okay. If you're not a part of OptionSwing, consider being a part of OptionSwing before that so you can take advantage of the $80 off. Okay. What you'll do is click on the button, enroll, and what will happen after that is that there will be a key that is sent to you. And after that, what you do is you just sign in. It is going to bring you to this page where you can sign into your Discord page, and there will be an option in there to input your key. All you do is input your key and then click join Discord, and that's it. Okay? Cool. So once again, Saturday, 12 p.m. Okay. Oops. And we'll be going through my trading system, which is very different from what I'm teaching you guys on YouTube. Okay. Some of the information will overlap, but in a much more in-depth manner. People who have taken the course know what I'm talking about. When I come onto these webinars and teach you these concepts, they're taking, it's like a very integrated approach, but when you come for the mentorship course, it's a completely new portal that you're going to open up, because you're going to learn about risk management. You're going to learn about planning a trade, and the way that I do it is I use a teaching method that I like to call peeling the onion, where I start with the concept and I keep layering onto the concept. Okay, and you start penetrating the layer of the onion one by one. Okay. And by the time you're done with the day's concepts, you've reached the core, and now all of a sudden you're ready to apply all of these concepts into your trading style. Okay, so we go step by step. We go 1, and then 2, and then 3, and then 4. And at first you'll be like, "What the hell is this guy doing?" And then at the end of the lesson, you'll be like, "Oh my God, wow! Okay, I didn't understand what he was talking about at first, but now everything makes sense." So turning up for the course is a really, really great way to learn in a cohesive manner. Okay, I like to think that the way that I've built this course is unique. It's one of a kind. You can't find the information on the internet because it all comes by experience. Okay, and the experience speaks by itself with these testimonials that people write for me. All right, to see gains like this where your portfolio is going down, and all of a sudden, after taking the course, you see yourself, having massive gains like that. I feel very, very humbled by things like that. Okay, and I really appreciate it. So non-OptionSwing members, you get 2 weeks off, 2 weeks part of the OptionSwing community. It's a great Discord community to be a part of. I highly, highly recommend it. If you are not a part of this community, I'm not sure what you're doing. It's one of the best ones out there, sir. So come through, join us. So courses will go through Monday through Friday at 9 p.m. Eastern time every single day. Okay. And if you're unable to attend, they will be emailed to you every single day. So all instructions will be given through the EGA course channel, which is here. Okay, right now we have the intermediate course that are about to finish up their membership today, which I keep contact with every single day. And we talk about all kinds of things, all kinds of trades. They give me trade ideas. I give them trade ideas. Sometimes on the off days, I go on live calls with them on Zoom. I offer them my market insights. There's a lot of value in this course, believe me. Okay, so I get on live calls like during the market hours, and then I say, "Oh, guys, look, okay." Like the other day, I said Uber puts. Okay, we did a live market call, and I was like, "Okay, guys, I think I'm entering some Uber puts here. You guys, If you want to come through, you know, I'll teach you guys, show you guys what's going on. And then the next day, those puts were in the money. And I'm pretty sure we made a lot of money. There you love the Uber put in your analysis. And then Uber put is about to be in the money. And we made some good money on that one. So it honestly, I think the course pays for itself when you attend it. Okay, that's my insight on it. And I heard that from many people. So just hope that you'll consider taking it. And yeah. Okay. Guys, so I want to talk about some stuff here. Okay, first of all, pre-market looking mixed. So we'll just skip this entirely. I hope you guys will be able to smash the like button if you can. Like, you know, just smash the like button. Can we get like up to maybe 50 likes today? You think we can do it? Come on, guys. Only 14 more maybe, if we can. Let me read some of these things in the chat here. Good morning. Amazon, Okay, tickers. I'll get to tickers in a second here. I want to explain something else as well. Good morning. I should just hit the like button. If you're in here, you should do the same. Hey, thank you, Aiden. I appreciate that. Can you explain hedging term in layman terms, please? Yes, Eric, absolutely I can. Imagine if you have a car. And, and Chase, I know that before you even say anything, remember, this is a cyber truck, okay? The EGA mentorship course, people know that I can't draw for shit. So I'm just going to go ahead and say that this is my cyber truck, all right? Very cool snazzy car here with a really round bumper because it's a hybrid. Okay. Anyway, as I was saying, who was the one who asked me the question? It was Eric. Eric, let me explain this to you. What is hedging? Hedging 101, right? Well, you own a car, okay? And what do? When you own the car, you drive it around every day, back and forth from your house to your home. And in return, what do you do? In order to protect it from any damage, you buy something called insurance, right? You buy insurance. So hedging is exactly insurance, okay? You don't, what hedging is exactly the same concept. Basically, think about it this way. For your portfolio, right? Your portfolio, let's assume this is your portfolio. Now portfolios exist in the palm of your hand. And you have, a Tesla, Apple, whatever. And these are all your trades, and all of them are long, right? They're bullish trades, okay? Bull trades, which means you want the prices to go up, and they're all within the tech sector, right? Let's say your entire portfolio is made out of 4 positions that are bullish and long and all part of tech. Well, the insurance that you have to buy for this specific portfolio that you have has to be hedging against the tech sector, right? So when I say hedging, what I mean is you got to buy insurance, okay? And how do you do that? You have to either buy QQQ puts, or you can buy SQQQ calls, right? As I just mentioned earlier, okay? Now, the other question is, so when people always ask me, so Tyron, when do I sell my hedge? When do I sell my winning position? Well, if your winning hedge is up by like 100%, then I'm not sure what you're waiting for to take your profit. That just means that your insurance paid you out, right? But if your insurance position is still active and the market hasn't gone down, that is kind of the point of your insurance position, okay? The point of the matter is you do not want to sell, not sell your insurance position. You're not going to sell it. The point is, if you drive your car every day to and from work, just because your car didn't get into an accident, do you sell your insurance away? No, you don't. So why would you do that for your portfolio? What you're actually doing is building this cost into your profit taking when your positions go long. Okay? So as your portfolio goes up, right? You buy the hedge, right? And then what happens is this becomes a part of your cost of doing business, right? It becomes a cost. Your insurance contract becomes a cost, and it should never exceed more than 3 to 5% of your open positions, Okay? Now, what happens? If nothing happens and the market continues to go up, your hedge, you lose 3 to 5%. Okay? You lose 3 to 5%. And that's fine. That's the cost of the insurance. It's the cost. Okay? But what happens if tomorrow the market goes, or, well, it's probably going to go like this, but you get what I'm saying, right? Well, guess what? This 3 to 5% that you just paid for is now going to generate you profits. Okay? And so now you have the downside protected. Okay, I think that's adequate enough to explain the concept of a hedge. So I hope that you liked my minor drawing. That's very artistic and helpful. I'm just kidding, guys. Let's see here. Okay. Let's see what else is. You need to say that. You need to say super normal like 20 more times because people will definitely ask. Absolutely, Byron. I know. Best free educator around. Thank you so much for saying that, Francesco. I appreciate you very much. Thank you. Yesterday video was very helpful. Thank you, Carlos. Thank you for attending the stream. And yep, that's what we aim for. And during these webinars, we want to make sure that we put out as much information for you to succeed in your journey. That's the reason the webinars were created. I feel like the webinars are going to help you supplement majority of the things that I say on the live stream. What do you use to see pre-market data? Well, it's a bunch of different things, right? It's all the things that I just went through with you. I do the pre-market analysis with you. Definitely, I've taken both of T's courses and they are both very beneficial. A breath of fresh air, especially as somebody who was clueless before. Highly recommend his courses. Thank you very much for saying that, Chase. I appreciate you. That is a very nice thing for you to say. And it's been a pleasure teaching you, man. You're really a great student. So thank you for being such a great student. I just smashed the like button. Thank you for doing that, Valerie. I appreciate you. Yes, I agree with Chase. Took the beginner's course. T has been a great mentor and teacher. Thank you for saying that. I appreciate you. Best investment I've made, EGA beginner's course and intermediate course. Damn, guys, you guys are just making me blush now. Thank you, guys. Thank you. I really appreciate it. Okay. Like the vid, you be cracking yourself up. I know. I'll be trying to do that sometimes. You know, it's just like, it's more fun that way. Teaching's more fun when you're laughing and you're teaching and you're making other people laugh. I don't know, I just feel that way. All right, guys, we need to get to like 75 likes right now, guys. Like, smash the like button so that we can get to 75 likes. Okay, come on. I'm sure we can do it. Come on. Okay, I want to do a little bit, before I get into these ticker breakdowns, I want to do a little bit about explaining how the stock market is not the economy. Okay, I feel like many of you guys get really confused with this concept. Market is not the economy. Oops. Economy, yes. Okay. I know many of you guys are going to be like, huh? What do you mean, T? Like, what is this guy talking about? Because majority of you view the entire market as part of the economy, okay? And I know I've like said this on the stream before. Like, if you're a long-time attendee of the EGA live stream, you'll know that I've discussed this before. But I want to kind of break it down for you guys a little more today. I want to give you guys like a full breakdown on why the market is not the economy, okay? And you need to look at it from a agnostic point of view because it's more technical than you would imagine. Many people think of the stock market as a place, right, which is a building with a lot of, well, we call it Wall Street, right? Wall Street, okay, in New York, okay? And what happens here is a bunch of money comes in, a bunch of money goes out, right? And what this does is essentially reflects how the economy is doing. Well, that's a load of bullcrap, okay? Wall Street is actually a funnel for valuing businesses, okay? It is a valuation of businesses. the stock market is a place where people can come and speculate on the price of businesses, okay? And in the short run, this place is like a weighing scale, okay? In the short run, the stock market is a weighing scale. Wherever there is more weight, that's where the money will go, which means to say, wherever the companies that do well and do better, that's where there will be more money, okay? However, in the long run, the stock market is a transfer of wealth between people who are patient and people who are impatient, okay? And this is super important as a concept. Like, if you're a trader just starting off, I can tell you that what I'm about to summarize for you is a accumulation of information from 5 different books. Like, I'm talking about from Buffett, I'm talking about from Schiller, I'm talking about from Eugene Fama, I'm talking about from many different professional people who are not just traders, who are people who are investors and also economists, okay? So remember, you do not want to speculate in the short run. The short run is something that you can trade, but let me tell you that it rarely results in profitability, okay? And if you want proof of this, you need to go and read an article about how Buffett fought with a hedge fund manager once, and they had a bet where they were discussing whether active management and passive management would win, okay? And over 20 years, they made a bet, and then in the end, Warren won by investing in the S&P 500 for 20 years, okay? Versus that guy who was part of a hedge fund and was buying and selling and buying and selling and buying and selling day in, day out for 20 years, 10 years or something, okay? And he lost, all right? Now, the important thing to understand here is what makes up the stock market, okay? Right now, the stock market is made out of majority tech. Why? People ask why? Because these are the strongest companies in the world. Okay? And the strongest companies in the world are disruptive and innovative. Okay? So when we're talking about disruptive and innovative companies, these are the guys that are valued the highest, okay? Valued the highest in terms of dollars, all right? And just to give you a little bit of a teaser, Apple, Microsoft, Google, and Amazon. These 4 companies are valued so massively that they account for a huge percentage of the stock market, okay? So by saying that when the market is up, that means the economy is doing well, that is a complete myth. Why? Because the market is does not constitute a equal weight of tech or other sectors, right? It has a skew. There is a skew. It contains more tech. It has 20% of tech, right? On the S&P 500, it has 20% of tech, right? And then for NASDAQ, the entire index is disruptors and innovators. We can talk about, they're not just tech, but there are other types of companies too, right? And then you have the Dow Jones, which are the top 30 leading in the world, okay? Top 30 leading in their sectors, okay? So when you think about it this way, you start to understand that when the market's rallying, we're not talking about just the market. It's not about just the market going up because of euphoria. We're also saying that this is pricing in ahead some form of these companies doing better and better over time. Okay. And so in order to see what those companies are, you got to look at the indexes individually. Okay. Individually. All right. So right now, and one thing about it is, when the market is doing bad, when the stock market is down, it's pricing in a 6 months to 8 months ahead of bad times. Okay? It's pricing it in advance. This is when the pricing in occurred of the recession. Okay? And then after that, we're pricing in a recovery now. In fact, right now, we're already back, all-time high, gone much higher, right? We're already priced in a recovery. So now what comes next? Well, surely another drop, right? But when does that happen? For me personally, that happens when we have some good news. Watch for good news on, I'm saying general good news in the headlines. Like, oh, we just discovered the coronavirus vaccine and now everything's going to be okay, right? That's the kind of good news we need that will send the market tumbling down. Why? Because then the market's going to start to price in all kinds of developments that arise from a coronavirus vaccine. Okay? It's going to start to price in those things. So abrupt news shocks the market, and you need to be aware of that. Okay? So I hope that helps you out a little bit to understand a little bit about how market psychology works. Okay, 69 likes. I felt like we could get to 75 much sooner. You think we can smash the like button a couple more times here? If you're here listening to the stream, I appreciate you doing that. Thank you for being here, by the way. Okay, so let's go through XOM right now. For all of you guys that are part of the Option Swing Discord, you know that yesterday I called out the trade. I'm going to call it out right now for you guys. And in fact, you got a better entry too if you are here right now. Yesterday sometime during market open, I called out XOM. What I got into is a starter position, a very, very small position, because I had a inkling that it could drop further down. So I decided to take a very small position at first. The position is January 15th, XOM calls for the $50 strike price. The contracts are relatively cheap. IV is very low at 30-some%. Open interest is relatively good with this contracts. And I like the positioning of to energy, how it's been overly sold off, and how it has a lot of room to run. So it's dropping even more after hours, so you'll get even a better price here. I intend to hold these leaps for at least a couple of months. So this is going to be a long-term swing, something that you'll just like cash out much later on. Okay. So that's your XOM trade. We did the ticker. And then the breakdown, fundamentals, we found out the company is good to invest in. And then yesterday I executed the trade. So this is one of those weeks that we did it all together. Okay, cool. Yes, stimulus news might also shock it. Absolutely. That's definitely true. So any kind of good news, watch out for that. Okay. All right. Now the next thing that I want to do here is let us vote on next week's ticker of the week. So everybody who's here, all 121 of you, I'd really appreciate it if you could take a second out of your day, go new ticker, and then type your ticker and send it in onto the chat box right now. The ticker that gets picked the most will be the chosen ticker of the week. I say to choose something within the energy sector or choose something within the industrial sector. Those are still good. Even consumer defensive or consumer staples like these over here, those are still good to trade or invest in, right? Or if you know any beaten down tech stock, then we can do that too. Intel also looks interesting. It was sold off very irrationally. I don't know if this will continue here, but we need to do more analysis on the business to see if there is even a significant upside possibility here. So go ahead, vote your ticker so that I know which ticker you want to go for. Okay, I appreciate that. In the meantime, I'm going to break down some of these tickers myself up here so we can see what people have for me here. So let's go into the 1 hour time frame and get this done. HII, 200 calls for March 2021. I think somebody asked me about this before. I'm not sure who it was, but my answer to this is it's still bearish. I mean, it looks good for a long-term play. Your calls seem okay at 200. Did you say, yeah, 200 calls seem okay. You can hold those for sure. It's still next year, so hold them. Amazon 3250 for 821. That's next week expiry. 3250. Yeah, absolutely. Hold it. Absolutely. Sure. You can hold this one. I think that you'll get pretty close to it. Looks like it's just been consolidating uptrend here, so it looks pretty nice. Bullish on Amazon for now, for sure. Until unless we get a big market dip, and then your contract's gonna die. XOM, I just went through this. That's the trade I am in. Cisco CSCO 45 calls for October. Ooh, nasty gap down. Jesus. The trend is your friend here, buddy. If the market sold off, chances are, yeah. Oh, actually, hold on. Here, you can definitely do a fib retracement to see where it's gonna kind of retrace here. So expect at least a 50% retracement up to 45. Yeah, for sure. 50% retracement is certain. Aim for the 43 first, and then the 44, and then the 45. It should happen sometime. 45 calls seem okay. Yeah, absolutely. I think it's fine. Thoughts on NVIDIA August 21st strikes for 65. For 65, 21st August. Watch for a drop over here with NVIDIA. Seems like it's, I don't know. Yeah, maybe. I mean, if it can hold above this resistance here, then sure. It looks a bit weak to me though. I don't know. I don't see, like, what I saw here is the volume spiked here and then came down like this, right? And then volume came down here and then it went up again. Right, and this was lower, so which means people sold shares here. This was selling of shares, so now there are less shares being held by buyers by a fraction here. So I see that as a bearish reversal kind of a play. Let's see here. 76 likes. You think we can get to 80 likes here? Can we smash the like button? Twitter, 41 calls, 828. 41 calls, 828. Your strike is a bit too far and your expiry is a bit too near. 2 weeks away. I don't know if you'll get there by then. Maybe it will, I don't know. I think your strike's too far. You should have chosen a $40 call instead. That would have been better. It's $1 too far. Peace, love, unity, respect. The same to you, man, Dominic. Absolutely. Okay, let's see here. Cat, Baba, Intel, new ticker, Intel, J&J, J&J. Intel. Oh, is that all? Come on, guys. There's 100 of you. You guys don't want to vote on which ticker we're going to do next week? Oh, man. Come on. We got to vote, guys. Come on. This is not enough of people to make a proper decision here. And it's all mixed. Look, CSX, Plug, DAL, Caterpillar, Baba. I see one Baba. How many more? Baba, 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 Baba. No more Babas. The only one I saw multiple of was Intel. Intel or J&J is leading. Intel. Intel is leading. Another Intel here. Ooh. Okay, guys. I mean, let's see. Well, it seems like it's going to be Intel, the way I'm looking at it here. Intel, J&J. There's two people who voted for J&J too, so it's J&J or Intel. I'm okay with doing both, personally. ARC 110 call 3/19/2021. ARKK. What is that? I have no idea what this is. Innovative ETF. I mean, sure, I guess. 110 call. Your strike looks a bit far. Yeah, your strike's super far, and this thing needs to come down back to earth. M. I would take I would take profits right here. Take your profits and or set a stop loss. Either one. Do not let this position go red. Absolutely do not do that. Like that will be the biggest kick on your face if you let your position go red, to be honest. And it's highly possible if you don't manage the risk on that one. So be extremely careful there. Intel October 16th. Well, as I said, I don't know much about Intel at this point. I need to see what's going on with it. I don't mind doing an analysis if we cover it next week, though. Intel, yeah. So this one needs to move. It needs to move quite a bit, actually. Oh. Oops. Let's draw that again from the swing high to the low. Yeah, we want to see at least a retracement back to the 50 here. We want to see at least a 54 kind of a retracement. That would be definitely a key point there. Okay, let's see. More here? Is there more? Do we have more here? Did more people vote? Come on, let's see. We stopped here and then it was Intel, right? Okay, so how many more Intels do we have? SPG, B8. We already done Boeing, Jackie. I'm sorry. We've done Boeing in the past. Another Intel, one more. Another Intel. I see another Baba here. Baba. Best Buy. Intel. Yo, we just did XOM this week, Domingo. Come on. Intel. Okay. Guys, it's official. Intel wins. We'll do Intel next week. I actually don't mind covering it too. I think it's beaten down irrationally. So I don't mind covering it. It's been in a nice little sideways channel here. And who knows, maybe it breaks up and we can find a trade in this, a long-term trade, or even a short-term trade. So we'll go for Intel in that case. Intel 1. Intel October 55. Okay, so yeah, that one seems okay. IBM call for August 21st. IBM call. What was the strike? Eric, you gotta leave your strike for me to do an analysis on it, man. SWN. What is SWN, man? That doesn't sound like a 10 billion market cap stock. Yeah, dude, it's 10 million, man. buying a stock like this, you might as well like just, I don't know. Anybody can manipulate that option, man. Rohit, I hope you understand what I'm talking about here. If you buy into a stock that has a market cap of 10 million, just imagine one hedge fund invests 5 million into the stock to manipulate the price, okay? And 5 million is peanuts to them, okay? And they just take up all the shares in the companies, or half of the shares temporarily, propping up the price. It goes up, everybody buys in, and then dumps. So think about how trustworthy it is to invest in businesses like that, or buy options on businesses like that. I don't recommend you spending your money doing that. CRWD 102 call 828. CRWD. Oops. CrowdStrike. I actually like this company. Oh, okay. Possible bounce play here. Interesting. Yeah. Okay. Might have found a possible trade here. Nice job, Jason. 102 calls. Yeah, absolutely. Keep them for sure. What I do want to see though is more volume building up and momentum here. That's the only thing that's lacking for me to take this trade myself, in fact. I do see the bounce here, right? A nice little, if you look at this on the 4-hour, it's nice bounce on the 150 moving average. Just a strong bounce there with that wick over there, showing the bullish pressure. And then now it's starting to like bottom out here. Obviously, this could be either the start of a downtrend if we fail to make a high. So what we need to see over here is for this to break above this key level, which is going to be approximately your 102, 103 level. So yeah, break above this level here, this zone with good volume, and then it's going to be a good prospect to the upside. Right now, I don't trust it yet, but I do see the potential. Thoughts on Home Depot before earnings? I am personally bullish. Okay. Would you buy Intel shares? Absolutely. Why wouldn't I? But that's provided we can come up with the intrinsic valuation for the stock though. So let's do that next week on Wednesday, and then we can find out what we want to do with that, right? So we do the analysis first and then we make a move. We don't ever make a move without doing the analysis, okay? All right, cool. Apple 460 calls, 821. This will be the last sticker I do for you guys today. I honestly think that Apple's gonna have a big fall very soon, but then it's just like being propped up because of the split that's coming up. I think once right before the split happens or after the split happens, we'll see the shares tumble a little bit. It needs a corrective wave. It needs to sell off a little bit, come back down to earth before going back up again. So yeah, watch out for that. In fact, I think that a lot of companies are like due for a corrective wave. Okay, a lot of them. So watch out for those. Anyway, your options contract expires next week. I would say take your profits whenever you can, Brian. That's something that you shouldn't be holding for too long. Especially on a Friday like today, you got to sell this contract today. Your option expires next week. If the theta pricing in, and you got to sell this away before lunch, by the way. Okay, just FYI, as a word of like a caution, you got to sell this contract before lunch because that's when your theta pricing in is going to occur for the weekend. Okay, when we say theta works over the weekend, well, that's what we're talking about. Option traders start to price in decay sometime after lunch. Okay, so remember that. You typed SWSYN instead of SWN. Oops, did I? For which play? Will Apple fill one of those gaps? Absolutely. There's a high chance that it fills all of the gaps, in fact. Very high chance. Like, don't be surprised to see something like this and then boom, like this again. Right? It always happens, guys. Come on. Look at how often it happens. Okay? Is this not like, look, up and then boom, and then up and then boom, and then up and then boom, and then up and then boom. The higher and steeper the slope, the greater the fall. Okay? So, yeah, that's all I'm going to say. The lower and steeper the slope, the more lesser the gradient of the fall. You see? The higher the steeper, the worse the fall. Like this, boom. Like this is going to have a sharp fall, I'm pretty sure. Okay? So be careful. Be careful, guys. I see a lot of people buying Apple and this and that, and I'm like, I don't know how you guys are doing it. You guys got some cajonas, man. Thanks, brother. Appreciate the hard work you put in. Have a good session and a good weekend. Thank you very much, guys. All right, this is where I'll end the stream for today. I appreciate you guys being here once again. Have a good one. Have a great weekend. Remember, sign-ups at tomorrow for the mentorship course. If you're interested, go check it out. Go sign up. It's a limited time offer with the pricing, so I highly recommend to sign up sooner than later. And then make sure you smash the like button, subscribe if you haven't. And I'll see you guys on Monday for New Ticker Monday with Intel. Okay? Have a great weekend, guys, and happy trading.